Hey guys, what's going on? It's Lewis here with CLOUT, and in today's video, we're going to be going over the market in a bigger market update and also going over the previous trades that I've been doing. Hopefully, if you follow me, you've been noticing that I started putting out more content lately. So I'm trying to put out new content every single day from now on. So today is Monday, and on Mondays, I like to do bigger market update overviews. So that's what we're going to do today. And then Tuesday, Wednesday, Thursday, Friday, and all those days, we're going to be going over the smaller time frame technical analysis stuff, along with the news and other things that I could think of, just, foundational, fundamental trading advice, fundamental money advice, or just really principles, and also book reviews and just a whole bunch more. But today is Monday, so let's get into the market update for July 11th, 2022. Okay, first off, before we even start, I do need to go on some CLOUT because from my previous video, literally just the other day, I said that we should open up a short right here. It was live, or not live, but it was recorded and put out there, and we did just get it done. So here's a little recap video on that. We have that, right? And this break actually right now could be a great short. Have your risk defined. It's very easy. Boom, boom. Let's go. Okay, I'm sorry, I just had to do that. So now we could go into the actual market update. We're going to start off like usual with the big picture fundamental indicators, CBBI, MVRVC, all that stuff. So let's get into it. First one is the Bitcoin Bull Run Index. It's right now it's at a 10. So what this one does is it takes into account a whole bunch of indicators such as the 2-year moving average, the Bitcoin low line, the MVRVZ score, the reserve risk, the Woo Bull, the Puel multiple, the R holder ratio, all this other stuff, right? So it takes into a lot, sort of like an index of fundamental indicators. And this right now, it's at 10, very, very, very low. You could see back in 2019, it hit a 3, and that was the bottom. Back in 2015, it hit a 2. So it can still go lower. It can definitely still go lower. However, what do we notice? We do notice that once it does go below 15, that's usually an amazing opportunity to start dollar cost averaging into Bitcoin. And this is a huge reason why I am dollar cost averaging into crypto, Bitcoin, but mostly actually into Ethereum. If you watch my last video, you'll know why. It's because Ethereum is having the merge come up within the next 3 months. And that's why I'm putting more money into Ethereum than I am into Bitcoin, because I think that Ethereum will outperform Bitcoin over the next 3 to 4 months, along with Matic and other coins that are on Ethereum. However, just looking at this right now, going through these fundamental indicators, you can see that it is at a 10 right now, which has historically speaking been a great opportunity to dollar cost average into Bitcoin. And you know what? Maybe it could be over the next year. It might be an entire year that you dollar cost average. So it's not just, if it's not like, oh, you have $10,000, you put in $1,000 every week for 10 weeks. No. It's more like you put in enough that if you only have $10,000, then maybe you put in $400 a week, or maybe put in $200 a week. Because it has to be expanded over a long time. Unless you're actually an active trader like myself, then you could put in, $500 a week and then use the charts to determine whether or not you're going to, take your money out, trade it, and everything like that, which is a very good strategy, which can be a very good strategy. So that's number one. This is a great time to start dollar cost averaging. If you have a job, or if you have money that comes in every single month, hopefully through rent or through some other income means of income, then you can also average in by taking a small portion of your paycheck and averaging into Bitcoin. And that has historically been proven to be very, very, very valuable, especially when the CBBI is under 10. So you could see back here, it reached under 10. That was basically the bottom. It was very, very, very prolonged, but it started in January of 2015 and it ended all the way in 2020. 16. So, or November, December 2015, basically 2016. So an entire year pretty much of under 15. And back here, it was under 15. But this one didn't last as long, but this was in 2011, so a very different story. However, the real bull run, I guess you could say, started over here. So if you say that the bull run started over here, then it was pretty much from, where was this? October 2011 to, it was a little under a year. It was about like 7 months or 8 months. Same thing with over here in 2018 when we dropped below 15. It started in November 2018, and then by April 2019, so not an entire year, but quite a substantial time, months and months and months and months before we started the new bull run. So perhaps the same thing will happen here. Maybe we have 6 months, maybe we have a year of sideways consolidation, because remember that bear markets, they end once there is sideways consolidation, because this sideways consolidation enables the big players to accumulate more. They can't accumulate if it just goes straight down and then straight back up, because there's not enough liquidity for the actual big money to get it. They need to very, very slowly go in every day, basically, the large sums of money, but not so large to move the price. They want to get it at that lower price. So that's why there's these long periods of accumulation, and then at the top there's long periods of distribution. Technically, or at least it was this last cycle, and the cycle before this, not as much, but still, it wasn't just straight down. There was from November, December, January. It was about 3 months, and then another spike in late January. So about 3 months of distribution in 2018, and even 2013. There was, let's see, January, November, December, January, 3 months of distribution. This was October, November, so about 2 months of distribution. Less distribution back here, unless you count this right here, which if you go on the on-chain data, you could see that back here was a lot of whales selling back here. And then a lot of them accumulated more down here. However, they stopped selling, and they did not sell up here. So very interesting on-chain data, which is one reason why I stopped caring about on-chain analytics a long time ago, because they could be manipulated, and it's very difficult to assess. Like right here in November, December, January, people were taking their money off of exchanges. So you would think that would be a good thing, right? But no, it really wasn't. So clearly, so I don't look at on-chain. I'm just looking at these. So let's get back to the actual video. We have the CBBI, great time to average into Bitcoin according to the CBBI. NVRVZ score is next. Where is this? It's in the green. What does that mean? It's a great time to average into Bitcoin and potentially Ethereum and other cryptocurrencies. So that's number one. This is number two. Yes, we can stay in the green for a very long time. Yes, the price could get cut 50%, could have a 50% haircut from where we are right now, according to history, and we could still be in the green. That's why I'm not going to just, we're in the green, I'm jumping all in. We're under 15 on the CBBI, I'm jumping all in. No, I'm not going to do that. But I'm definitely going to be averaging in every week. I have enough to where I put in money every single week. I don't touch it. I don't look at it, nothing like that. It's a lot of the money that I sold back in November and December. I'm literally just putting that in every single week, not looking at it, not touching it, because I think that I have a high certainty, 99.999%. I don't like saying 100%, but I have such a high certainty that Bitcoin will be $250,000 within the next few years, that Ethereum will be over $10,000 in the next few years, that cryptocurrency is here to stay, especially Bitcoin, especially Ethereum, possibly also Solana and a few other ones. So I'm averaging into them because that's what you do. That's what smart investors do when the prices are low. And I'm expecting much lower prices, but when you dollar cost average, you want the price to go lower. You want the price to go lower when you're dollar cost averaging, because then you lower your average buy-in price. Okay, you continually lower your average buy-in price when the price goes lower and you keep on buying. So that is what I'm doing, but I'm doing it very, 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 very slowly, and I could do it for an entire year and be totally fine. So next up, we have our HODL ratio. Let's look at this. This one is more accurate than the MVRVZ score, in that when it hits the green, there's less time before our HODL ratio touches the green and the bull market starts, and it's already been in a bear market. See, it's already been in a bear market for quite a long time, but this still hasn't reached the green yet. However, when this does reach the green, the prices are usually much, much lower and much closer to actually reversing. Now, it might still be months away. It might still be months away, but it's not a year away, like in the CBBI that we saw, or in the MVRVZ score that we saw. So once this hits the green, then maybe I'll bump up my average buy-in price. Let's say I was averaging in $400 per week. Maybe I'll bump it up to $600 per week, or $1,000 per week. Maybe not $1,000 per week, but probably $600 a week. I'll bump it up 50% if it's a low number, or if I'm putting in, let's say I'm putting in $1,000 a week, maybe I'll put in $1,200 a week. Just bump it up, because it's most likely closer to a low once the R-HODL ratio reaches the green. So it's not on the green yet, so I'm just sticking with my standard average. Next up, we have the Bitcoin rainbow price chart. This is in basically a fire sale zone, and historically speaking, an insanely good price to get in has been when it reaches this fire sale zone. And that's another confluence of, fundamentally speaking, why I'm going in. So there you go. You have this, you have the MVRVZ score, you have the CBBI index. That's three big indicators, in my opinion, telling me to go in. Then you have the fear and greed index. It's at 22. This is more for me, not in terms of me averaging into stuff, but more for me in terms of when I want to put on bigger fundamental trades. So 22 is not low enough for me to put on big fundamental trades. And the market, you have to understand how to use this, or else if you just say, oh, it's under 15, I'm going to buy it, like boom, like every single time, then it's not going to work, because sometimes it could go under 15. It could stay under 15 for days or weeks. So you need to use this very particularly. The way I use it is that if it's under 15, I automatically buy once if the charts line up. Basically, if we have a big dip and this is under 15, let's say this is at 8 or 9 or 10 or something like that, or even 11, 12, I will buy it. But then I corroborate what I'm doing with the charts. So it's not just one indicator tells me to do something and I do it. No, it's a whole list of factors. And that's what you need to do. You need to really use a whole lot of different things that line up, that have your bias, so that you can make better trades and put on bigger position sizes when you have a lot of what's known as confluence. So things are just lining up. So the fear and greed index is at 10, and the CBBI is at 10, and the MVRVZ score is in the green, and the Bitcoin rainbow chart is in the territory, the basically fire sale territory. And on the chart, we're going into a big support level. Like all of these things, if all of these things line up, you're good to go. But never just use one indicator. That usually will not work out in your favor for very long. And so we have these fundamental indicators that I just went through. Now let's go to the charts and go onto the total market caps, the dominance levels, and a few more things. Okay, so now let's go onto the total market cap. We have two big areas to look at, which is the 2020/2021 yearly open and close. So actually, let's go to the 12-month. We have this right here, January 1st, 2020. It closed right here, and then obviously it opened on January 1st, 2021. So let me just say this. Excuse me. On the very last day of January 2020, it closed right here. And then on the very first day of January 2021, it opened right here. So that's a huge level. That's a huge, huge level. You could also see that January, the last day of 2018, it didn't open there, but this was the high. It not on the last day of 2018, but this was just the high of 2018. It actually happened early 2018. But yeah, so we have the high of 2018, and then we have the close of 2020 and the open of 2021. So that's a very important level, and that's pretty much the most important level that we have right here. The next one that I point out is the 88%, which typically is where the institutions buy. So this is where I would really want to like buy. Like originally I was like, okay, 61.8, boom, let's get in here. And then it fell down here, and I was like, okay, I need to get out because it's like it fell below the 61.8. Like it's not going to work out. So the next one is the 78.6. I want to trade this level. I want to trade this level, maybe trade this level, something like that. But ultimately, I'm targeting this level for the total market cap of cryptocurrency because, well, let's face it, we're in a recession. The market's not getting any better anytime soon, and money is not like people don't have discretionary income to buy cryptocurrencies and stuff like that. So, and there's regulation coming. There's black swan event that we don't know about. There's so much stuff. So this is the big level that I would love to see is right over there. And, yeah, that's for the total market cap. So just under $500 billion, which is actually terrible because that would mean that we're under 700 billion, which was the top, 750 billion, which was the top of 2018. But I mean, yeah, 2017, 2018. But you know what? I feel like we could come down there. I mean, that's what happened with the internet stocks in 2020. So why not? And this is what I have in my mind, the institutional buying level. So this is where institutions want to buy in. That's where I'm going to buy in. And of course, below that we have this $300 to $320 billion level right here, which was major support and major resistance and major support, major resistance. So this is huge. This is, I probably won't have any more money to be able to invest by the time we get here because I'll probably be all in right here. I think this is like too obvious of a level to go into crypto that it's going to get front ran. And I don't care if it gets front ran here or gets front ran here or gets front ran here. I'll probably be in right here. Just how I said I was going to be in to Bitcoin at 26K. I got in at 26, and then I puked it at like 22 or something like that. And now I'm saying I'm gonna go all in here, so I'm gonna try to make a big long play here. But technically speaking, it's all gonna be for trades. So we have that. And what do we have right now? Let's go into the lower time frames to get a little bit of a better picture. Well, first off, if we look where we are, look left. This is the bottom area of this cluster. So sure, I get it. Like it's okay. As an area, like this entire area is something that makes sense. Ideally, I like the 78.6 and the 2020, 2021 top area, which is down here, obviously. So I would much rather long something down here. But at this point, look at this. It's like this area, this was the bottom, up, down, up. And then, you say, okay, I'm going to long it right here. So you put your long right here, and then boom, it just goes straight underneath of it. So are we going to see that again where it just dumps straight underneath of here? I don't really think so because I think that this is such a powerful level. However, nothing is safe in crypto. All that I know right now, if we're playing level to level, we have the top, we have the bottom, we have the midline, we're below the midline. That's not good. So from a technical perspective, right now, this is where I'm targeting for the total market cap. And then once we reach down here, I will want to go long in and basically go long in down here. Okay, so that's the total market cap basically not looking very good unless we could get back over the midline. The next thing that I go over is the total 2, which is the total market cap without basically Bitcoin. And same thing, 200 weekly moving average for the total 2 right here. It's down in this zone, which isn't really that good, to be honest. And the main area is the same thing, 88%, which is what I really want to get into. This area right here is also a really good area. I originally liked this 78.6 down here. It would be a good time to buy it down here, but it would be better, obviously better down here, just is in my opinion. I don't really want to go too much into the total 2. I like using the total more, but total 2 is still fine. Then we have the the crypto altcoin dominance levels, and with this we have seen it stay above the 51% for quite a long time, even though technically speaking it's not really up here because of the USDT, USDC, and stablecoins that are part of the dominance levels. But you know, this is what you gotta do. So regardless, we're up here. I want it to come down here, but it's really weird, the fact that things are so far down already. They've dropped 80% plus, and yet, you know, we're still all the way up here, and this makes it sort of confusing for me. So maybe if we come down here, this will be the bottom for altcoin dominance levels. Maybe Bitcoin just isn't as popular and more people are moving into altcoins, and it's the dominance level for altcoins is just always going to continually stay up in this area from now on. I don't know, but I do know that if it comes down to here, then that would be a good time to start really looking for longs, having long bias. So long bias right here, long bias right here. Right here where we are is more of a short bias in my opinion, because if we go down to the daily, this is the top, this is the bottom, this is 50%, basically in between here and here. Yeah, it's really, I don't know. We're just in this range. So we're in this range. Get out of alts at the top, go into alts at the bottom. Pretty simple. I'm literally just going to play it like that. Longing alts down here, getting out of alts down here, and then within the mid range, pretty much just playing it not aggressively when it's over here. Bitcoin dominance is going down. So short term looks better for alts actually. Bitcoin, let's look at the actual Bitcoin chart now. Yeah, okay, so now we looked at the dominance level. Dominance levels really aren't really saying that much anymore. They used to be really good. Or maybe they're just really good at key levels, you know, like down here. That was a key level. That was really good. And if it comes down here, that'll be really good. But right here, it's in the middle. So you can't really use it, you know. But let's go on to actually Bitcoin now, and then Ethereum and the rest. Okay, so now let's go on to Bitcoin. Bitcoin, we have, the first thing I want to say is that we had the 85% drawdown back here, the 82% drawdown down back there, and we have yet to have the 80% drawdown so far. And if we do have an 80% drawdown from the top, then that would leave us at $13,600. So $13,600 definitely on the table. Also, that is the yearly open right there, yearly open and close for 2017, 2018. So that is a very key level, and that's the level that I really, really want to see ultimately hit. Perhaps when Mt. Gox sells its Bitcoin, we can get it down to those levels, to the $14,000 level. That's also the weekly 300 moving average on the weekly time frame, which is pretty important. Actually, never mind. It's not. The 300 weekly moving average is at 17,000 right now. So, yes, scratch that. But this is a very important level. Let's see. Did I have the Fibonacci laid out here? Okay, so for Fibonacci levels, the Fibonacci level, 17,900 is the 78.6, and that's pretty much where we tagged off of. And the 88, which is that institutional buy level, is just at $12,000, which lines up really, really, really well with this. So 12K is now my all-in buy zone. Like, just buy it and forget about it. And I'll just be trading back and forth. We might have a big pump up. We might not. I don't know. Things are not looking very good, in my opinion. And I definitely, absolutely do not think that we will see any run up past 30K. I really don't see us going past 30K at all anytime soon. So that's the first thing. So now let's go on to a more granular level. What do we see happening with Bitcoin right now on a more granular level? Well, we have this daily chart right here, and that was what we put in before. So I think that we will see a bounce from 20,200, but probably only a small bounce like this. This right here is a possibility like that. Okay, that's the first possibility, and the second possibility is this coming all the way back down. And then, of course, the third possibility, there's infinite possibilities, but I don't think that this is the bottom. I don't think that 20,000, whatever the low of this is, 20,278, I don't think that was the bottom. I think 20,170 is going to be the bottom. So that's the daily. Let's go into the 12-hour. So we got the 12-hour, bringing this in here. Maybe if we bring this up, it's possible. Okay, it's possible. It's possible that this was the bottom for sure, but I don't like it. I don't like it because this wick is so big. I don't like putting my Fibonacci on such a big wick. I like bringing the Fibonacci down to a better level, and this lines up with $20,000. Key psychological numbers. So for me, for Bitcoin, $20,000 is the key level. This is where I would want to buy, and so my next trade setup will look something like this. Have to just really do something like that. Maybe if I go down to the 4-hour, get a little bit more with it. Okay, so 20K, 20,067. That seems fine to me. Yeah, this should be my trade setup right there. Something like this. Hopefully, fingers crossed. So I would long it from here to here. That would be my first trade up, and then my second trade is if it comes down here. And then if it doesn't bounce from there, then this is the third one. But this higher high, higher high, higher high. So two higher highs, high, higher high, higher high, and low, higher low, higher low, higher low. So where it could still fall to here and make another higher low. If it falls all the way back down to here, then then the higher highs and higher lows theory is going to be broken. And wait a minute. Is this? Hold on a second. No. Bring this up here. This is more 20,140. My ETH to BTC if it taxable. Okay, so I just got an alert on Ethereum, and Ethereum, I think Ethereum is going to do more than Bitcoin. So this will be my trade setup for Bitcoin. And then let me just get into Ethereum real quick and check what just happened. Okay, so we're done with Bitcoin now. This is what I'm hoping to see with Bitcoin. And let's look at Ethereum. This is Ethereum against the US dollar. That's not good. It's actually, yeah, that's not good at all. This is actually great. Wow, this is literally the same exact shorting opportunity as the very first clip that I showed against Bitcoin. So easy. This is actually a very good opportunity right here. All right. So sure. It's a little, I mean, actually, it's not as good. Oops, it's not as good of an opportunity, because you could also argue that this is actually, yeah, this is much more. It's much more of an opportunity right here to long it. It's much more better to do something like this rather than put this right here. Yeah, this makes a lot more sense actually, because we got all the bounces off of this move right here. So yeah, I think that this is the move for sure. So 11.11, maybe like 11.23, something like that, somewhere around this area. Let's see, does that line up with anything? Lines up with, all right, so that's underneath there. This is right here. Yeah, 11.94. Okay, cool. Yeah, this seems pretty good to me for a trade setup. Maybe if we go into the 1 hour, get a little bit more granular with it. Whoa, bring this down here. Okay. Bring this over here. Okay. That seems fairly good. It's pretty close. It's within 1%. It's within 2% of the 61.8. So yeah, I think that this is a trade setup that I could see happening. Probably want to do that. Yeah, this is the trade setup that I would want to take for Ethereum. Yeah, and I would take half my profit here, and then I would take the rest at 11.90. That's where I would take the rest. So this is going to be my trade setup for Ethereum. Okay, so I have Ethereum. I have my trade for Ethereum right here. However, if it closes below this line, let's say it closes like here or something, like if I get stopped out on here, then I will do this. Okay, I'll try something like that. But right now this is it. But if this doesn't work out, then I will change it to something like this, possibly. So I just have to wait and see. The thing that I just saw with the Ethereum against Bitcoin is this right here, which is not good. See, I took it from the 1 hour chart, so very, very hyper dialed in. And because from the 4 hour chart, it's just wicks, 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 wicks. Even from the 4 hour chart, you could see it's the body and then all of these wicks, and then it closed underneath of here. So that's really not good for Ethereum against Bitcoin. So I think over the next few months, Ethereum is going to outperform Bitcoin. But I think that right now, Ethereum has a way to go. And honestly, I still really want to see Ethereum come down and hit this line, this huge support diagonal line. That would be great. Or maybe even the 61.8 for Ethereum against Bitcoin. But yeah, I trade Ethereum against Bitcoin, and like the daily, it's like, oh, okay, this is weird. Like this is just the daily bottom, and a bunch of wicks. Sure, and the daily top, and so a bunch of wicks above it. Yeah, but go down the 12 hour. All right, still, this is just a giant wick, and then this it's not the area where you need to put this part, right? 6 hour, 5 hour, 4 hour. Okay, so now we get to the 4 hour, and this is where the 4 hour comes into play. So I look at the 4 hour and see close below the line. So I had a position in for Ethereum, and now I am taking that out and I am putting it into Bitcoin, because Ethereum against Bitcoin might have quite a ways to go. So this is my ETH versus Bitcoin trade for sure. And then I'll say back here, I'll say convert Ethereum back into Bitcoin. Honestly, okay, hold on a second. I need to go back to this thing. Honestly, looking at this chart, I don't even think that I need to have the stop all the way down here, because if it closes underneath here, this has been literally since June 18th a support. This has been a support since June 18th. It's better on this. I don't know why it's better on this. Is the Coinbase chart. This is the Bitfinex chart. It's better on the Coinbase chart for some reason. Is this the Coinbase chart? So this is the Coinbase chart. So yeah, it's better on the Coinbase chart. Why? Where is it? Here we go. Let me do this real quick. Yeah, from the bottom to, oh my gosh, there you go. Bottom to right here. Yeah, if this closes, you don't need. Yeah, if it closes below this line, then that's really bad. Let me copy, paste this. If it closes below here, you could short the retest. That's what I would do. So maybe instead of having that be, see, but this one, the charts are different. This is, Look at this. Look at this. This chart, this is Bitfinex. You could see it's the bottom, and it's the closing right here, and then it never touches any of these. Let's look at on Coinbase. It's the bottom, it's a wick, and it touches right here, and it basically touches right here. So the lines are different on both charts. The lines are different on both charts. So in summary, I want there to be a bounce off of here, or I want there to be a deviation below and above. But if there is a close, actually, I don't even want this. If there's a close underneath here, then I'll short this. That's the game plan. It's either one or the other. Okay, and I'm gonna end this by going over the dollar DXY, and this is just literally okay. So basically, the dollar, this right here, was the high for 2017 and 2020, and when it got rejected from these levels, that is when the crypto bull runs happened, and it just broke out from this level. And it broke out from it, but when you break out from a level that is from 2016, so 5 to 6 years, okay, 5 to 6 years, and you break out from it, you go up a lot. So that's what's happening. So I don't expect the dollar to stop rallying, and as long as the dollar rallies, Bitcoin will continue to go down. The dollar has a lot more room to go up, so Bitcoin has a lot more room to go down. So why can't we see $14,000 or $12,000 Bitcoin? I think it's absolutely on the table. The only saving grace that we have right now is the fact that there is a major bullish divergence on the RSI, and the stochastic RSI is fading down. But like, RSI are indicators. These are indicators that don't matter in trending environments. Okay, so 1, 2, 3, it's just higher. Price keeps on going higher. It could just continue going higher. It doesn't matter. You have to understand how to actually read the RSI to understand it, and it doesn't matter in these situations. That's why I'm using this chart, these type of charts now, with no RSI, not even volume, no MACD, none of that. It's just pure price action, because price action tells a lot more than those things. These become sort of useless in these environments. So that's just important to know. And the dollar is probably going to come all the way back up to 120, minimum 111. So Bitcoin is attached to the dollar, and it's going to go down, in my opinion. Okay, and so the next thing is the Nasdaq, and the Nasdaq is very correlated to the Bitcoin market. And if you look at the Nasdaq, you could see that it fell, and it's just bouncing down. So not good. Where do I see the Nasdaq bouncing from? This level right here, just above $10,000. So basically like $10,500 is where I see the next bounce from. If this comes back up, which it's on its way back up, if it happens, absolutely short the heck out of everything until it comes back down here. So that's the main thing. And to be honest, if we see the institutional buy zone, maybe down there, but I mean, the 78.6 is also a key level. We've seen that multiple times, that this level has been respected. So there's that. But yeah, for the most part, Nasdaq is in a downtrend. Nasdaq is correlated to crypto. So, and I don't see the Nasdaq anytime soon reversing. So I don't see crypto reversing anytime soon either. Okay, and then the last one I want to go over is of course, the S&P 500, because that's majorly important. And this is what we have for that. This is where I want to see the S&P 500 before I start getting like super bullish again. So bringing it back to the beginning, remember when I said now is a good time to be dollar cost averaging into Bitcoin, but it could take an entire year? Well, yeah. I mean, same thing with the S&P 500 and Nasdaq. It could take a whole year for it to come all the way back down here, right? But if you get in down here, and then years later, things pump up and you've been averaging in constantly week after week after week, it could pay off really big. So yeah, I think that Nasdaq has room to go down. I think Bitcoin has room to go down because of that. I think the dollar has room to go up. I'm overall for 2022 bearish and continue to be bearish. And if we get a miracle bounce up to 27, 28K, I'm going to sell everything I have for sure and put on short positions. And yeah, I don't see anything good happening. The only good thing that I see happening potentially is maybe in Congress during the midterm elections, everything will be overrun by Republicans who will put in different plans or that should potentially help big businesses. And if that works out, then obviously businesses, the stock market should go up. They get more profits, buybacks, all that crazy stuff, and then, things should go up. But until that happens, so maybe in November, December-ish, we'll see. But overall, just thinking about it, I am not liking it. Overall. Finally, we have Solana. I really want to get Solana under 25. That would be awesome if I could do that. Would love to do that. Otherwise, I'm waiting. And yeah, I like I said, trading level to level. Tomorrow, what I'll do is I will update again, and I'll see. If the price came down to my buy zone and then shot back up, we'll see, and we'll just see what happens. I'm gonna try to update. Basically my updates every day, if I do them every day, will be the trades that I put on. And once the trades are completed in my previous videos, then I'll make another technical video. But I'm not gonna make another technical video if my trade hasn't completed. I'll make news videos and stuff like that. So we will, I think we'll end it here because it's been a pretty long video. I hope you guys got a lot of value. You saw all of my setups, everything that I'm really thinking of, big picture type stuff. I have my account. That's my investment account, averaging into Bitcoin and Ethereum, mostly Ethereum right now. Small amounts in that account. And then I have my trading account. In my trading account, I'm looking to I just play the ranges. Long it, short it, it's all good. Try to take my profits early, not be too greedy. And yeah, that's what I'm doing. So with that, I'm going to end this video. Keep on stacking those sats. Keep on making those gains. If you need to stay out of the market, stay out of the market. If you need to get a job. If you need to do something, do whatever you need to do just to save as much money as possible so that you can go in when the tide eventually turns, because markets, just like everything, are cyclical. And what comes up goes down. What goes down usually goes up. And I think that Bitcoin is here to stay forever. And it is the future. Crypto is the future. And we're going to have another bull run, maybe not as extravagant, but there will be plenty of opportunities, tons of opportunities. Take this opportunity to learn, to educate yourself, to get good in finance, to get good in crypto and understanding what it's all about. And maybe even other things like real estate, stuff like that. That's what I'm doing. And just educate, learn. Start a business, do something. I don't know, whatever you gotta do, use this opportunity because we have the downtime. And eventually there will be a time that things turn around, but you will take the most advantage of those times that are really good if you educate yourself and go into the things that you know are good deals during the down times. So make sure that you know what you're doing. And with that, I'm going to sign off. So thanks again. Thank you so much for watching. Thank you again, and I will see you in the next video.